And welcome into Market Talk for Friday, April 23rd. Great to have you here with us. I'm your host, Jesse Allen, and appreciate you joining us here for another edition of Market Talk as we wrap up the week. MarketTalkAg.com is our home on the web, MarketTalkAg.com. You can find us as well. Facebook, Twitter, Instagram, all of our social media links are on our website. You can also find us by just searching at Market Talk Ag at all of those social media. You can also find all of our streaming sources, iHeartRadio, Apple Podcasts, Spotify, and more, all on our website, MarketTalkAg.com. It has been a very, very interesting week in the grain markets. A lot of volatility, a lot of upside movement, and just a lot to unpack and talk about. And we bring in our good friend Chad Hart with Iowa State University joining us here today on Market Talk. And Chad, great to have you back on the show. How are you, sir?
Oh, I'm doing well. It's a pleasure to be with you today.
Chad, I appreciate it as always. It's great to catch up with you and get your insight on things. And just looking here as we wrap up the trade here on this Friday, obviously much of the week, so much bullish momentum in this grain market. A little bit of a correction seen here on Friday, at least through the overnight and into the morning trade, and just kind of maybe a little bit of a breather, so to speak, here. But just looking at this entire week, Chad, these are price levels we haven't seen in a long, long time.
You're right, Jesse. I mean, the idea is we have to go back basically 8 years to see prices like we're doing right now. And we've been pushed to this price level, not for one reason, but a variety of reasons. The idea is as we look at the supply side, we're worried still about the drought that hit last year's crop and is still holding on to a good chunk of the country right now. We got the cold snaps that we've seen over the past couple of weeks that has definitely slowed down planting progress, brought up more concerns, especially about the winter wheat and how well it weathered these, cold snaps as we're looking out there. You combine that with weather problems down in South America, and yeah, we've got some supply side issues that have helped lift prices. And then you put the demand side with it. We've seen very strong export sales. We continue to see good, strong feed demand. And we've been watching especially the ethanol industry, really start, just constantly starting to work through more corn as we've gotten deeper into the year. And you've still got this really strong demand structure, even with these higher prices. And so you put all that together and you get this nice, I almost call it a perfect storm that helped propel prices forward for most of this week.
And that's a great way to wrap that up there, is a perfect storm. We've been talking about all of these factors for weeks now, for months now, and everything's finally seemingly come together. And I think another thing as well, too, that maybe you could talk about a little bit with all the volatility we've seen in the markets. Obviously, the expanded trading limits are there, the specs, the funds, they can have more contracts on the books. I mean, that is adding to the volatility in these markets as well, Chad.
It definitely is. I mean, this is something that I talk a lot with farmers and with my students on campus, is that when you think about what the specs are adding here, it's not that they necessarily push prices to go a certain direction, but they tend to amplify the signals that the market is already playing upon. And so, yeah, having the spec has helped add to that volatility. In this case, for farmers, that added volatility has been in the right direction for us, adding to these higher price levels. Now, it can work in reverse as well, and we've definitely seen that over the past few years as well. But yeah, as we look here, like I said, you've got all these factors going on at the same time. But yeah, what the specs are doing is they're looking at what's happening with the hedgers, the fundamentals of this, and going, nope, we're going to buy into that as well. And that's what leads us to $6 corn and beans in the teens.
Oh, and I want to get your opinion. I know you talk with a lot of farmers throughout the Midwest, Chad, and different seminars and webinars and everything else. And you always field the questions from the folks there on the farm. What is the attitude right now from farmers when it comes to these prices? I know a lot of folks have, they sold either early with old crop, or now they're holding on to what they have left, and they're holding on to new crop sales and not really making many sales, although we did finally see some here towards the end of the week, it sounded like. But what is the sentiment you're hearing from farmers when it comes to their marketing? Why are they either making some incremental sales or not making any sales at all?
Well, I think for those that are making these incremental sales, and from my perspective, that's what we would like to encourage. That when we talk about these markets, it's not one of these deals of trying to hit the home run and capture the market price at the top and sell all your crop at that point. We wish we could do that. It's incredibly hard to do. But if we increment sales in there, we're typically trying to increment in times when we know that price is very good for the farm business. And so, yeah, those incremental sales, especially, like I say, when you're starting prices you haven't seen in 8 years, it's a good time to increment some sales in. For those that haven't made that move yet, and they're reticent too, I mean, it's
I think we may have had Chad Hart freeze on us there. I think you're back, Chad.
Oh yeah, I think I'm back as well. I saw the black circle or black screen and circles pop up, but I wasn't sure exactly what I should do there.
Nope, you're good. Go ahead and finish that point. You were kind of getting to the point for folks who haven't made those sales,
Yep.
Chad.
So for those that haven't made the sales, I think what they're trying to do is make up for lost prices over the past few years. Especially for the 2020 crop. As you mentioned, a lot of folks marketed that early and felt that they, for lack of a better term, got burned as we saw the price recovery as we moved into the fall and here into the spring. And so they're looking to capture as best they can. Now, again, here's where I'd go. When you're staring at the best prices you're seeing in 8 years, now's a good time to start making those moves. Do we look for the possibility of another leg up here? Yeah, we could. But I always hate to look this gift, sort of in the mouth. The idea is this is a record high price for the last basically almost 10 years. It's hard to say can we go higher? Yeah, you can, but I wouldn't want to bet the farm on it.
And that's a great point. And you've told me this over many years of working together is that, for every market that goes up, eventually it goes down, and we could stair step our way up and elevator down. And some folks have told me too, it's like, do you want to sell when the market's going up or try to catch the falling knife? And I think that's a big thing that farmers are looking at right now.
It is. In fact, I had a discussion with my students earlier this week, and one of the students brought up, and this is where I could tell they paid attention in class. One of the graphs I had used over the past semester is the graph of what happened to prices through 2007, 8, 9. And if you will, it's somewhat eerily similar to what we've been seeing so far, 2021, going into, looking forward to 22, is that if you think back 2007, 8, 9, what we saw were prices that started out around $3, rose all the way up to $7, $8, and then crashed back down again to $3 in short order. And when you look, what we've done is we started out around $3. Now we've built our way up to the $6.50 range. Could we see that same type of very swift traction up and down? And the answer is, yeah, that could happen again. And that's why we try to talk about, as you say, incrementing our sales on the way up so that we don't have to worry about it when it possibly crashes back down again.
Well, Chad, another thing I know you mentioned, obviously export demand has been strong, although it's waned a little bit here the last couple of weeks, but still, I mean, it remains strong. I know some of that attention has shifted to South America, but even Brazil lifting tariffs, saying that they might have to import from the U.S. or Ukraine or somewhere else here this year just because their supply issues down there. And then I know China, the USDA attaché over there, I think they raised the export target for corn earlier this week. So looking at the demand picture and looking at some of those factors, are you seeing anything there we really need to keep a close eye on?
I would say, yeah, we want to keep a close eye on it. You're right, especially this time of year. Our export sales traditionally are slow at this point in time. As you mentioned, South America, this is when usually their open sign is on. And we've seen the international focus move down there. We continue to see, I'm going to say, yeah, not spectacular sales, but just enough sales action here to indicate, yep, there are problems in South America. Those international buyers are still looking up to us. And you've got, places like China, who has been the biggest market over the past year, still indicating, yep, we probably need some more feed grains moving into the countryside. And so you add all that together, and that's, again, another force that has been helping propel these prices forward. Like I say, the export sales don't have to be big at this point to have significant movement for the market.
Well, Chad, overall, looking at outside market factors as well on this grain trade, I know we watched the dollar closely. We've been watching crude oil, geopolitical factors. So, I mean, on top of the big ones that we're watching with weather and supply and demand, we're watching all these other outside market factors and geopolitical stuff too, and that is weighing into what's going on with the grain markets and livestock right now.
It is, but I will say this: it is taking sort of a seat back to, let's call it, the fundamental factors, but it's always lurking in the background, especially when you reach this rarefied air with these contract highs. That's when you do start to worry about, are you building up enough negative factors behind this? As you mentioned, these outside factors, the geopolitical factors, the concerns about how geopolitics might influence geo trade as we look out there. And then you put that combined with this idea of these higher prices putting pressure on those folks that are our customers. Higher corn and soybean prices mean that feed rations are costing more. That's going to put pressure on our domestic livestock industry. That's also going to put pressure on our export sales as we're squeezing not only the margins of domestic livestock producers, but international ones as well. Same thing as we look at the biofuel industry. Yeah, crude oil has been moving up, but corn has been moving up faster. And so that's been squeezing the margins for our ethanol markets. And so there does come a point where you push that price high enough and that demand does have to come shrinking back down again.
And Chad, one other note I want to talk about on grains here, touch on it again. We briefly mentioned it, but weather. We obviously know the issues around the world, but looking in the U.S., we're starting to shift our attention to the drought here and the problems here. What are you hearing from producers you talk to across the Midwest right now? How much of a concern is this dry weather? Is the cold snaps? How much of a concern is that right now when we still have a good solid month left in our planting season?
Well, I would say it's a concern, but it's not a concern where they're dramatically adjusting what they do. I mean, I think we did see some adjustment, for example, in the crop mix. You go back and you look at the planting intentions report, and what it basically showed me was that we do have some farmers, especially in the western corn belt, the Great Plains area, where they were concerned enough about the drought that instead of going corn, they went sorghum. Played a little more defensive there because of the drier conditions. But yeah, I would say overall, farmers are saying, yeah, we know we're under a drought situation, especially on the western side now. We know the forecast right now is saying that's likely to persist, especially for the western corn belt. But you still plant, and in this case, you always plant with hope. Hope that the rainfall will just be enough to get that crop going and along and, make it through. And there's still plenty of time for these weather patterns to break up enough. For example, as we're looking right now, the idea is that we are seeing these shots of moisture come in, to the corn belt. We are seeing that pipeline of moisture from the Gulf working its way forward, as it almost always does this time of year, giving us at least some shots of moisture as the seeds hit the ground.
So lastly, with the weather side, do you think the market trade has overreacted to the weather issues right now, or are they simply trying to get ahead of what the forecast is saying that we could continue to have drought?
Well, arguably, it's a little bit of both, isn't it? I mean, the idea is we're building in a weather premium for fear that, the drought does persist. And if the drought, let's face it, if it really does, we've got another leg up to go. But so, it is, overreacting is sort of getting ahead. You have to get ahead. The whole idea of trading within the market is trying to get in the market and make your move before the rest of the market does. And so with everybody concentrating on the forecast out here, they're concentrating to the upside, and therefore that's helped push prices where we are at right now.
Let's flip our conversation to livestock. And, for much of the last week or so, it's been a rough go in the cattle market, really just taking it on the chin here. A lot of disappointment, I think, with cattle ranchers out there and looking at feedlot country and prices and everything, just in the face of the higher grain prices, really just not, we lost a lot of momentum in this cattle market. What are you seeing there? Any positives to the negatives that we know are out there?
Well, I would say the positive is this, is that when we're looking at the demand side for that beef, it is fairly strong. It continues to want to pull product forward. I think the biggest challenge, as you mentioned here, is that when we're looking here, there is still sort of a disconnect between what we're seeing at the grocery store and what we're seeing in the export markets versus what we're seeing as we look at that fed cattle market. And to me, it comes back to this case of when I look at the demand for meat, it is really strong right now. The problem really is that the demand for the cattle to create that meat is facing a bit of bottleneck. And that bottleneck is meaning that we're having this backlog of animals that's holding that cattle price down, even though the beef market would be signaling we need to pull more through.
Well, and I think as well, looking at cattle, and this goes with hogs too, with the demand for pork. I mean, with COVID, hopefully, starting to ease more with vaccinations and folks getting out more. I think despite the rise in grain prices, that's hopefully could be the one saving grace for our livestock markets here as we get into the summer months, Chad.
Yeah, I think for the pork, yeah, definitely. As we get back here, that for lack of a better term, the reopening up of our economy, and especially being able to get out to restaurants and do more activities outdoors, definitely does lend itself to better demand on the meat side. And I guess I'll play it this way: when you look at the export side, what's fascinating right now is actually the beef market looks stronger right now than the pork market in terms of our sales out there, which is sort of opposite of the signals you would expect based upon just where futures prices have gone. Beef export sales are running somewhere between 15 and 20% better than last year, whereas the hog side, we're actually down a bit compared to last year. But I would argue it's, that downward pressure on the hog side is still the second best export year we've ever had. So it's still a really good, strong international demand out there. You combine that with what's happening here internally, and yeah, like I say, when I'm looking at the meat markets, things do look better as we're heading into summertime, grilling season, and that's the seasonal pattern.
Yeah, very, very true. On the hog side, we've seen an impressive run up in hog prices. We corrected a little bit here recently. Do you think we put a top in this hog market at this point, Chad?
Well, I'll put it this way. I think the hog market is sort of like I would describe the crop markets today. They're taking a breather and reassessing where we're at right now. If you think about, the hog side, we put these futures over $100 here for a little bit, and we've been able, we held that for a while. That's a very strong price to hold on to. So when we look, I'd say historically, we're still sitting in incredibly strong prices there. And I think that, traders are waiting to see, okay, how will everybody adjust to that? Will we see some pushback from consumers as we push, pork prices higher? Or will, for lack of a better term, the euphoria of being able to get out and grill and do things sort of overwhelm that for a while, and that way we can hold on to these very strong pork prices in the futures market.
Well, Chad, I always appreciate the insight. Before we run out of time, any final thoughts or anything you'd want to reiterate to our listeners here today?
Well, I think as we're looking right now, I'll describe the crop side as, farmers right now are sort of in the catbird seat. The idea is even before we put those seeds in the ground, you're staring at contract highs for our prices out there. That's a fantastic spot to be in. And it does give us this opportunity to put in some sales at levels we haven't got to do for 8 years. That's a great place to be. Livestock side, it's the challenge, as you say, of managing margins. And I think taking advantage of, especially the opportunities that we get, especially, like I say, when I'm looking at cattle, we've been range bound pretty much the entire year. We've been floating in about a $10 range. But the idea is if I can put some sales in when we're at the upper, half of that range, there are still some margins to be captured out there. Same thing as I'm looking at the pork industry. We've got some margins to capture and sort of lock in. And that's a really good spot to be in. Yeah, it's more challenging for the livestock side. But, compare that to this time last year, when I think if we had told you could be here today, most livestock producers wouldn't believe they could get back to these price levels, given what we were staring at last year.
Well, it's definitely an interesting time in agriculture and in the markets. And I always enjoy catching up with you, Chad, and I appreciate the time. Thanks for joining us here on Market Talk for this Friday, and I wish you a great weekend.
I wish you that as well. Thank you very much for the opportunity.
Chad Hart with Iowa State University, our guest today here on Market Talk for Friday, April 23rd. I'm your host, Jesse Allen. Find us online, markettalkag.com. I wish you and yours a great weekend. We'll talk to you on Monday.